Hey, what's up, everybody? It's Billy Nash. It's episode 21 of my podcast, Luxury Real Estate. And I just want to say, get ready. It's going to be a great summer. I know we're gearing up. Memorial Day weekend, just days away, right? Make sure everybody puts on a lot of sunblock, especially if you're from the Northeast, because you probably were out of the sun the entire winter. We're a little bit fortunate here in Florida because we have sun all year round. The only difference is in the summer here, we feel like we are in the Congo, and it feels like it's about 150 degrees. But I hope everybody has an awesome summer. So figured we just kind of see what's going on in the real estate market, some things that are happening, updates. I know last month we had some implosions in the banking industry with SVB Bank, and then we had, which was really amazing, was First Republic, which was an amazing bank, still is. JP Morgan now owns it. But of course, they are going to shutter some branches, and there'll be a lot of consolidation. What a home run deal, though, for Chase. JP Morgan Chase, what a great asset to buy. The only problem is a lot of those ultra high net worth clients, spread their assets around. I was in that industry for 22 years. So the chances of a guy that's got, $50 million at First Republic, there's probably a good chance he's got 50 million with Chase as well. So probably will cannibalize some of the margin because they sell a lot of the same product. But we'll see. We'll see how time goes on. I do think that it has subsided somewhat. I think there is tremendous opportunity in regional banks. We need regional banks. We need mom and pop banks. Just don't take the assets and invest them in dumb shit, right? Learn how to hedge your bets. Right? And that's a perfect example, right? Perfect example, hedge your bets. And then that's kind of what happened. In social media and the run on the banks, it's amazing because if you're an institution, right, you're managing money, you could go short these stocks, create a false run on the bank by just social media, right? Everybody starts pulling their assets out and these stocks tank. They tank. So I definitely think the SEC will be involved. The regulators will be involved because there is no doubt in my mind, and I said this 2 months ago, that there was probably some very strange option trading before these runs started. Probably puts on the stocks, and probably most likely they were being shorted. And guess what? All that stuff is transparent, so they will smoke those out that may have went down that path. No doubt, it always happens. So how does this affect, the real estate industry? Lending, of course, is critical to the commercial real estate industry, to the housing industry in general. Luxury real estate, our price point typically is a cash buyer. So that buyer is buying these properties and writing a check, but everybody gets affected. It's a psychological thing. I don't care who you are, how much you got. When the market gets, when you get those storm clouds that are now around us, and I talked about storm clouds in January that they were coming, they're here, and we'll see how bad that storm is. I talked about rising interest rates. Maybe the Fed would pause over the summer and then raise rates again. I'm going to stick to that. I know that everybody's telling me, oh, rates are coming down, and I do think they will. But the economy, the underlying economy in certain industries, especially the service industry, is still strong. People are still out there spending money, right? So what does that tell you? It could definitely mean the inflation is going to stay at an elevated rate, if not tick up in the summer. I mean, look at prices of flights. I mean, you can't fly anywhere for probably under $1,000 and have a decent seat, so you're not sitting in row 37 by the bathroom, right? And first class, I mean, you got to take a second mortgage to fly round trip first class. I mean, it's gotten out of control. It's crazy. I mean, geez. So I think there's a lot of data that's coming at us from all different directions, and it's hard to differentiate what will lead to next quarter's numbers because they're all mixed signals. Right? We had an inflation report that came out, right? And that core inflation was down year over year, and it looks like it did kind of, hover off or tail off a little bit. But again, that's excluding food and energy, Duh. So excluding food and energy, it's leveled off and might be down a little bit. So inflation is still elevated, and it affects everything. Building product, housing prices. The business, and we talked about this once before, no doubt the volume is down at least a third, but deals are happening. I know everybody listening on this podcast has done a transaction this year or multiple transactions, right? So deals are still there. The buyers are still out there. The sellers are still out there. And you just have to give your clients good advice and be transparent about what's happening in the market. I saw mortgage rates start to tick down over the last couple of weeks, which helps the housing market in general. But again, it comes down to lack of supply, right? There's still a very big lack of supply throughout the country in the housing industry, right? Lack of supply. So that keeps pricing elevated. So I have not seen any big correction in the market. I know everybody, a lot of buyers are out there waiting for a 2008 scenario to happen, and I have not seen it. Right? And this is coming from a guy that worked at Bear Stearns. Right? I was in the trenches. I was at Bear Stearns the weekend we collapsed. This is a totally different animal. Regional banks definitely, I think, the storm clouds are around, but fundamentally, there are some really, really good institutions, that are getting sold off like it's, they have a million bad loans, but it's not the case, right? The case is bad management, bad asset allocation, bad money management, and not being prepared and hedged properly. That's really the issue. And of course, rising interest rates for the last 12 months have been the biggest we've seen in over 20 years. But I do think not to be negative, I do think there's more banks that will most likely go into receivership. I think the Fed, now that they've showed the market. Right, the Fed showed the market that they will backstop these institutions. Well, what goes to show you that there's not going to be another bank run on another one, because they know, hey, listen, equity will be wiped out, right? But bondholders will get wiped out, but the assets of the depositor will be protected. So be really careful if you're allocating any funds to bank stocks. Buy an index, right? Buy an index. So we've had a couple of earnings reports from public real estate companies, which are definitely a reflection of what's going on in the market, going on in the housing market around the country. We had Compass report earnings a couple of weeks ago. They were actually, if you call that good, they lost $150 million for the quarter, $150 million. They tapped into their emergency credit line, and they're down to probably about 9 months of runway with their cash. So fingers crossed for Compass. It definitely is a nationwide good brand, and I know some really good rock star agents at Compass. But you got to keep your eyes on that balance sheet. Super important. No doubt the brand would most likely get bought because they have a good brand. But cutting a third of your workforce, cutting back on all the technology that you claimed was there to help all your agents, it's going to be tough. It's going to be tough. And I give the guys at the helm a lot of credit to keep that ship floating. And to keep recruiting now with no incentive to leave, no monetary incentive. But just for me, I see a local office here that's got 50 empty chairs. It's a lot of space. So good luck to them. And again, I'm not bashing them. It's to grow that quick, that fast. Good for you. Let's see what happens over the next 4 to 6 quarters. Going to be very hard to raise capital if the banking industry continues to do what it's doing. Also, let's take a look at, your business. How have you done in those first, 5 months of the year? Are the things that you need to adjust to? If there are, do it, right? Adjust to those things that need to be done. On the last podcast, I talked about, since it was episode 20 things that I've done to help you with your business. If you didn't listen to that one, go back and listen, because there's a lot of important things in that podcast that I do every single day, right? So go back and listen, right? I think that's very, very helpful. Trying to think of any highlights that have happened. We got a couple deals closing this month. Let's see, they are both, they're both buy-side transactions. Had someone that was moving from New Jersey, and that deal is going to close. Did a great job, found him a beautiful property, and they're throwing in the flag. I'm getting out of Jersey. Boy, have I heard that a lot. And then the second deal was on the west coast of Florida, in which we marketed. It's actually a pretty good, kind of pretty good example. This was a deal that came to me that literally, without me knowing, the listing agent, and I was involved after the listing was canceled, had priced this property probably 35% over where the market is for that particular area of the country, right? Florida, 35% over the market. So what is that? I mean, how does that work for your business? You know, I was absolutely floored, literally, to see this property priced after it was canceled, and they had it on the market for 5 days, and then the client fired them. 35% over the price of where it should have been marketed, right? So we do, you know, I do what I do. You know, we did some amazing photos, some beautiful presentation, but the key is I priced it properly. And in 21 days, it's under contract with a 30-day closing. That's the way you roll. Price them right. What if this client didn't kind of have an epiphany on day 5 and say, "What the hell am I doing?" What was the strategy for that agent? What was the strategy? Right? Sit for 6 months, start lowering the price, 50 grand here, 50 grand there. And then what happens with the uncertainty in the market? What happens if the market does have some sort of anomaly in the fourth quarter and people really get the shit scared out of them, which I'm not saying there will be, but why set yourself up for that, right? Take the risk and uncertainty out of the market, right? Take the risk and uncertainty out of the market. Price your properties correctly. Make the proper offers. I'm seeing it here in the Palm Beaches. I'm seeing properties that are getting priced right now 20% over the market. And guess what? They're beautiful properties, and they're sitting. And they're going to sit. They're going to sit. And at the end of the day, it's okay, because eventually they get a little squeeze and you'll have to adjust to where the market demand is. And there's no fault to the, it's nobody's fault. It's just expectations that are set based on prior experience from 12 months ago, right? This isn't 12 months ago. So use your head when you're pricing these things, right? And your client will appreciate it. You'll miss some. You'll definitely miss some. But at the end of the day, take a shot, right? I put out a couple feelers on a couple properties, right? Told the seller agent where I would be. And, of course, we have somebody buying it in a week, and that never came to fruition. But I'm still out there. I'm ready for my bid. Let's go. So they know my number, and if the timing is right and everything works out, I have the buyer, right? And that's got to be your attitude. So I'm going to keep it short on this one. I am going to actually do some podcasts from Europe, which I think will be exciting. I'm going to look at some beautiful real estate in some European countries over this trip that I have planned with my significant other, Tracy, my love, and we're looking forward to it. And we are actually crossing the Atlantic on the Queen Mary 2. We do it every summer. Over 2,000 nautical miles from Brooklyn up to Newfoundland, off the coast, through the Flemish Cap, and then across in front of, down past Ireland, and then into the English Channel. It's a 7-day voyage, and it is an incredible experience, and we love it. It's a great time to recharge your batteries, refresh. And then I'm going to do some podcasts from London, Prague, Budapest, Slovenia, Southern Italy, and Tuscany. So I'll keep everybody updated on some of this beautiful real estate and some of the things that I've experienced while we're over there. So I love sharing these trips with my friends. And remember, travel is growth, right? Travel helps your business. It gets you recharged, keeps you fired up. So I hope everybody has a great Memorial Day weekend. Have a great summer. Stay focused. Put on a lot of sunblock. I had a little cancer scare a couple years ago with a little mark on my skin, and I'm half Italian. I got olive skin, but guess what? That sun is strong. So put on some sunblock. And I love you. Keep doing deals. Give me a good rating. Go on to where you listen to your podcast, Spotify, anywhere you listen to it, and give me 5 stars, good rating. Have a great Memorial Day weekend. And the next time you hear from me, I will be in Europe. I'll talk to everybody soon. I love you. Keep doing deals. Talk to you soon.